Good morning, guys, and welcome to today's edition of the London Session Open. Today is April 28th, 2020, and it's 10 a.m. in the morning when we're doing this market update. I did not forget about you guys. It's just I had a meeting that extended way past 9:30 when we usually start. The best thing is really just to follow me on Twitter. You can see the link here. It's on the actual page here on Investing Cube. And if you're watching this on YouTube, then you can just click on that link there and subscribe. You will send out a message just before I go live every day, so you don't miss out as well. If you are a subscriber to the ATFX YouTube channel, you can press the little bell button and you get a notification like this one I have right now here on my phone, which tells me that I'm live. So that's the best way to keep track on what I'm up to. All right, we're going to take a look at the markets as well. We have a webinar coming up, a special webinar on May 5th. Tomorrow I have a special webinar about crude oil markets. And I'll put that on my Twitter about an hour or so from now. So you can check that out. I'll see as well if I can put an image to it up here so you can see it. If you don't want to come back to Twitter, you can probably see it here on the site later on. Okay, guys, so let's talk a bit about the markets, and we're going to begin with the stock markets because that's where all the fun is. Currency markets, there's some action, of course, but it's a lot of false moves and no real trends. So stock market indices is really where I've been focusing on. All right, so remember this, right? So we said look by at 10,421 in the DAX for this to go upwards. Well, we pushed upwards. We're now at the take profit area. I do think all the stock markets could go up higher. We talked about this from the very beginning, how we should be bullish eventually, and we did turn bullish from these levels here, and then we've been bullish because we're bearish on the way down from a technical point of view, and I want to continue to be bullish. The situation with COVID-19, the growth rates are very low. People talking about reopening the economy. We have also all the central banks are just pushing so much money into the system. The ECB this week might announce that they might start to buy junk bonds. That's going to further tighten yields in places of companies and places like Italy. So things are calming down, and not everybody's going to get their job back. So let's not, forget that. Not everybody's going to get their jobs back. Like airlines, they're not going to have the same traffic as before. Maybe we'll do more domestic tourism now. So things are shifting around, and will shift around. And again, we're not going to be at full capacity, but I do think eventually we'll go up. If we go up to 1,000, 12,000 in the DAX, wouldn't surprise me. Will it take time to retake this? Yeah, definitely. When the market declines the way it does like this, it takes about 2 years. So in the US stock markets, if the market declines more than 20%, it takes 2 years to recuperate the prior high. So we're definitely going to go up a bit more, and then we'll probably have a bit of a setback, and then we'll trade sideways for a little bit, and then we'll see what happens. But it's been sustained over the last few weeks. If you're a long-term buyer, this is a very good time to buy. And as we're talking about it, my curiosity, I know we don't really do this, but let's take a look at Lufthansa. I want to see what that's doing, that stock. So this is the Lufthansa stock, and you can see Lufthansa stock is on rock bottom still. So for the airlines, we're not seeing anything from their highs here in 2018. Lufthansa is down with some 73%. The stock has definitely stopped declining and is at long-term support. I would not necessarily be buying it. Let's take a look at Air France. I'm not sure what they're called there. Airbus. No, that's not the same. I don't know the ticket for. Here we go. Air France KML. I think it's this one. This is the one on the. This should be the one then. Should hopefully be the one. Not sure exactly if it's the right one, but still lingering around the low. So again, some industries will not bounce back, but are people gonna buy iPhones? Yeah, that's what people are saying with this chart here. With the Apple rising with 35% from its lows, and currently being down with 13% from its all-time high. Of course, they're gonna buy Apple phones. Here's some other company I'm following. This is the owner of Gucci and Yves Saint Laurent. So these big French and Italian fashion makers. Stock slid by 42%, and then from this very low number 46. Obviously, this is a huge range, but trust me on this. People are gonna still be buying those 500-pound shoes when this is over. So I highlighted this to my clients when we're down at the bottom. And good companies, they're being bought. Bad companies are not really being bought. Or companies that are in problems, right? But we will survive. Don't worry about that. Is it gonna be different? Of course. Is everybody gonna be good? No. Well, life is unfair, right? Markets are unfair. And our jobs as speculators and investors is to know the rules of the game, play slightly better than everybody else. That's it. There's a lot of people out there that are upset that the Fed is supporting the economy. They're upset that the governments are supporting their economy. Well, that's the purpose of governments, no? Support their citizens. Otherwise, we might just go back to the Stone Age, everybody on their own. Some people like it like that. Maybe because they think they can do better at that opportunity. Well, I think if you can do better when you know the rules, you probably can do really good as well when there's no rules. Long story short, I think we're going to be all good. Technically here, this is also what the charts are telling you. The charts are also telling you that we shouldn't be buying at 10,772 because people sold here on April 20th and April 14th. So does this mean that we can't go higher? No, that does not mean that. There's a bunch of other markets I think will break a higher. And I think the DAX is going to go up higher as well. But if one is not already long, then we need to pull back to 10,489. That's where the risk-reward ratio is good. So what can you do with the first position here? You can book half or 75%. And if you're really bearish, you should book everything. This is the S&P 500 as well. We talked about buying, and the last setup was to buy at 27,000 or 2,795. The idea was to buy here for this to go up, where we are at the take profit level. This market is about to trade higher. Check out the Russell 2000, which is a small cap index. I also had a few ideas there to share with my clients, and that one really good. We took out the highs. I think we'll continue to trade upwards here because again, you got 26 million people that lost their jobs. You got jobless claims for this week coming up. Maybe you have 4 million again. Okay, you have 30 million Americans that lost their jobs, right? What's going to happen after things come back online? You shall see that to maybe 15 million. And then 6 months later, you may be looking at 4 million. So I don't think we're going to be in that permanent state. What if the whole virus mutates then? Yeah, that could happen as well. But there's big money in making vaccines and big money to making drugs. So there's an arms race, like technology race here, trying to solve this problem. Are we gonna solve it? Of course we're gonna solve it. It's in our nature as humans. So again, I think we're gonna go higher here in the S&P 500. But would I be buying here? No, I wouldn't be buying here. I will be buying on the dip to 2,820. I think this could easily go up though. If you scalping, maybe you can focus on 2850, but I would not do focusing on that. I'm not very good scalper, so I don't do that anymore. There are other indices you can check out. Check them out. European indices on the cusp of breaking out higher. We just need to go up with another 0.5% or 1%. We'll break those, and then those European indices will try to catch up with what's the American ones. Is it gonna work? We never know for certain, but what we can do is we can have a stop loss in place. And if we put a stop loss in place, if we get it wrong, then we'll be okay. Let's take a look at crude oil. And crude oil is the big thing that could really ruin stuff, because you have a situation now where you have a lot of these high yield companies, also high producers of energy that have debt, and it's not looking good for them at all. If price lingers around $10, we're going to be an issue. Longer run, when demand picks up, I think we'll be at 30, and that's pretty much what the futures markets are projecting anyway. So I think that's where we're going to be at. But in the short term, these companies can go bust. They're banks that have lent money, so in oil states and places like that, it's not going to be very fun. From a purely technical perspective, yesterday and actually already on April 22nd and April 23rd, I said look to sell. I looked to sell at 18.13, and you can see that little arrow said sell it and book it here. I sent a message on Twitter yesterday as well. We are at the take profit level. This is where we should be booking profits if you did sell here. So we can now get rid of this, and we can tighten up the trend defining level like that. Could probably put it at 19. You can get rid of that little thing now, and I will just finish that, close that trade, and then we will wait for a pullback. Can we go lower? Of course we can. So there's this big ETF that we have, I think $2 billion or so has gone into that ETF and is buying these contracts, and they need to get out of there because otherwise the clients are gonna, if this goes back to zero, the ETF is going to go bankrupt probably, and it can even like create massive losses with some of the brokers. You got Interactive Brokers, for example, they lost 88 million, and you have the exchange that maybe at one point might be getting into trouble, because the whole idea with the exchange is that they're the middleman, so you don't have to worry who you're trading with, because the exchange, the CME, will ensure that you get your money, and they are the middleman. But when things change rapidly, who knows, maybe they will go bankrupt as well. I don't think so. Actually, I'll take that back. I don't think they're going to go bankrupt, but I think definitely we can have some brokers and other people losing money if we go down to zero. The problem with betting on zero, though, is that that was once in a lifetime opportunity, and very few people expected this. Even people that are like the best oil traders and best oil hedge funds, they didn't even anticipate it to go down to zero. Maybe $10, yeah, but not zero. So this is a good little spot to book profits. If we swing to the upside, I think people are going to book profits here as well. Can we go down? Of course we go down to 6. You can see that panic happening. And if you really want to bet for that, maybe you can book 75% of profits. Of course, what you do with your trading is up to you, but I will be booking 100% or 75%. Okay, gold. Let's talk about gold. All right, so this is gold. So gold, we talked about buying on a dip, and I pushed it down a little bit a few days ago, and I left it at 1686. I'm not sure we're going to reach that level now, so I'm going to actually put some fibs here, actually, just to double check. How low did we go? All right, so I'm going to push this up just a tiny bit, like that, and then we'll see what happens if we go back to the lows. We're creating, we're dealing with a decent little uptrend. If this level fails, though, we can go down to maybe like 1,600. That's psychological level, and then we might rebuild from there. Because when we're dealing with uptrends, we deal sometimes with short-term uptrend, and that is the one we're operating with now. So we're dealing with this little short-term uptrend, which creates these lows. But there's nothing stopping price of doing that and then up, which means that this little short-term trend would fail, but sort of this big picture trend will still be bullish. So that can happen, but the way this is looking right now, the price action, it looks like we're just going to do something like that. And if we go up to the high, that's a good little level to book profits, and then we can go upwards. And this by itself, if it fails here, it will be forming a ascending triangle, which is also a bullish pattern. Let's talk about currencies then. Currencies are unfortunately a bit boring and providing false breakouts. So a few days ago, we said we're in this triangle and we're looking to move down, and we did go down, but we didn't go down as much as the triangle suggested. And then I said we took out this level, so let's turn bearish. The market went up yesterday, almost got it stopped out, and then it went a little bit lower, and now it's going back up again. For now, the trend remains bearish below 10873. and there's no change to my outlook, so we're gonna just leave it the way it is. But because the whole thing is just trading sideways, it's not really what I will be focusing my efforts. Here's GBP versus the USD. So we're bearish from here to here. That worked out great. And then we said if we swing back up here, we're gonna sell again and have stop losses just above here. You can see the price traded to the stop loss level yesterday, and today is going upwards again. And we could be forming what looks like a head and shoulders with a head, right, and a left shoulder. And for that to trigger, we need to trade below 122.42. We could also just have a little pullback and just going upwards. If you get rid of everything, it's quite clear to see that we have a bit of a bullish bias. If you look at the Aussie dollar and the New Zealand dollar, they're all going upwards. So maybe this is also going to go a bit outwards. But I'm not 100% convinced. But I do like 22.42. All right, this is the dollar versus the Japanese yen. And this is looking interesting. You got a low here and a low here. And you got a low here created yesterday. Now, a second time, it's trying to trade below. A third time, fourth time, sorry, it's trying to trade below it. This level here, this level here, is a bit of a range that gives you a bearish bias. In fact, that range is here. And we triggered that yesterday already. But then you have this section here. You have this section here. This is an ascending triangle. And you can take the midpoint here. That gives you your target. You can also just take the base, which gives you a slightly more aggressive target. This is the interesting level though. So we can take this out, probably go up a bit and then go down. And turn the funding level is going to be up here somewhere. That level is, let's make that 108.04. And I think that's it. We covered all the main markets. If you do have any questions, just put them in the chat box, see if I can help. And good morning to you guys as well. So I got a question from Hai. He's asking me, what do I think about Brent Crude Oil? Okay, so we can check it out. So let's do that. And we got Simeon saying good morning. We got Maurizio as well. Good morning to you. We have, who else? Vincenzo, good morning. And we have Liz, good morning to you. And then we have Antonio, good morning to you as well. Stefan says, I'm still holding on to my dollar CAD short. Here it looks like it's about to make a nice break lower. Do you like it better than yesterday? I was looking at the dollar CAD yesterday, and I don't like it better. It is trying to break down. So I hope for you that it goes down. Myself, I'm neutral for now because of the conflicting signals. I would like to wait for a break to 138.50, alternatively a break to 142.63. So for anyone that doesn't know what we're looking at, you have a small head and shoulders with a head, left, and right shoulder. And the break difference from here to here gives you this target. And then you have inverse head and shoulders, which is head, left, and this becomes the right shoulder. And then for that trigger we have there. What I do find a bit confusing is the fact that crude oil is down a lot and Canadian dollar is not. It should actually be higher, but it looks like people prefer selling dollars. So you're seeing that little push right now, having that break right now. So congratulations, Stefan. Hopefully this will continue and we'll go a little bit lower. So we've got a question about Brent Crude Oil. Sure, let's see if we can load Brent. So let me see here. Let's take a look at the June. I just want to see how it looks like. I haven't looked at this one. So this is the actual Brent Crude June future. Let's see how it looks like. Whoa. This is end of day, so I don't have live data for this one. There's no specific pattern I can see here, except that we took out this low, have a bit of a bearish downtrend. If this was a double bottom, then the difference here would have been, if this low was exactly here, then this would have been your target. So down to 12 something. Let's load a CFD one. All right, this is the CFD. It looks almost the same. Let's take a look as well at the big picture. So you have a low here from November 2001, and you have a low here from this is 1998. So the trend is clearly on this CFD pricing is clearly bearish. So there's a short-term level here, which is 23.25, but then you have probably this level here, which is the actual breakout candle. So as long as you're below that level, we should probably be able to trade lower. First sign that this is giving up would be a break here, but we're gonna focus on this here. So we might swing up and then probably do something like that. That's what I think. It would not surprise me at all if we're gonna be at 19.4 at one point, but it's not the best opportunity right now. I think the best opportunities is go through your charts and check out some of the European stock market indices. You got the CAC 40, for example. That's looking super interesting. You have some interesting patterns there. If you can buy some S&P 500 and stock market indices, I think that's as well. I haven't been on Twitter just yet, but I will be checking that out. So I check out Twitter because on Twitter I follow perma bears and they don't understand why we're not lower. And that is what I find interesting. When the perma bears are starting to give up, then that is when it's interesting to actually look to maybe turn less bullish and start to get out of it. That's just a small sign. Ultimately, you want to keep an eye on the actual charts, see what they're telling you. That's what I would suggest to you guys. Follow the charts, spend a bit of time on Twitter, but don't spend too much on Twitter. Don't read up on all the conspiracy theorists out there. They make money on being conspiracy theorists. It's quite interesting. There's one super famous, he's on TV, he predicted the 2008 recession. So he's super famous, and I saw him interviewed by Real Vision TV, and his idea is that the virus is gonna mutate. You had all this debt that is gonna implode, and that's all good. That's all good. It might be true. The problem is, for you and me that are watching this, it's not really relevant because the market can decline 40% and then it can go up with 35% like we're seeing right now. So for us, that information is not really relevant. We need to remember that as well. Like a lot of the perma bears, they have this very long-term view, and I don't disagree. Theoretically, if you print money, the system will get upset at one point. So what are we supposed to do? Change our leaders? Yeah, we could vote. You know, people can vote, and people do vote. That can be something. But for us in the short term, all of that is not really super relevant. Anyway, this super famous guy, he predicted he's super famous over the 2008 recession. He was everywhere when that happened. But if you look at his track record, I found some stuff online. In 2004, he predicted a recession. 2005, he predicted a recession. 2006, predicted a recession. And then 2008, he predicted a recession. I think as well in 2016, he predicted a recession. And if you always have the same view, you will obviously at one point get right. But if you're trading like we are doing, then all of that does not make too much sense. It's the same thing. Like, it's quite interesting now. So if you look at something like the S&P 500, right? So the S&P 500, like, these guys were like, yeah, we're gonna collapse in 2018. Like, yeah, this is so bad, the situation. Some people on Twitter, I got 70,000 followers or something like that, and then it's like, yeah, we're gonna collapse, we're gonna go, we just build your bunker right now. Look at this, look at that, and then the whole push went up, And then of course the whole thing tumbled. But it was quite interesting. When it was down like here, they were like, yeah, I think it's gone down a bit too much. It's time to buy. The whole thing just tumbled. So, but still, you guys, a lot of recognition. So we need to be careful with who we follow. You need to go through the track record, try to understand what they're doing before we buy into everything that people say. Okay, we're going to wrap things up. Again, we have a special webinar coming up tomorrow about crude oil. It's not going to be on this channel. It's going to be on the GoToWebinar channel. So you need to register for that. And if you are an InvestingCube member, you'll get a notification about that. So I'm going to put it on my Twitter at AlexFX00. So I'll do that maybe in 2-3 hours from now. So just subscribe to me and then you'll get the notification. You can join me. It's free to sign up as well. Okay, guys, have a beautiful day. And I'll see you guys tomorrow around 9:30 a.m. London time. Thank you and bye-bye.